Ben, welcome to the show.
Hey man, thanks for having me.
I think you are officially our first call-in guest from, where are you? Tell our listeners, where do we find you today?
I am in a very remote area in Prince Edward County, not to be confused with Prince Edward Island in Ontario.
All right,
So
well, you can look across
I'm
the
hard to
lake and
find.
see Buffalo. What's is the water too cold to get in right now? What's the
Oh
vibe there
yeah.
right now in Canada?
Oh yeah. I mean, honestly, I was like rethinking my life choices when I was driving yesterday, and I saw snow on grass. I was like, I just like was in denial. Like, I didn't just see that. There's not snow on the
Well, you're like
so,
half American, right?
yeah.
Your Boston origin story, but how'd you get displaced to this the Canadian wilderness?
So yeah, I mean, I'm new here, so like I've been nomadic for a while, and actually, I mean, there's a whole other Shaggy Dog story, but I actually built most of Composer from Nicaragua, so I was there for about 2 years. Basically, got stuck there
Ooh.
for COVID. Um, I
Where
mean,
where in is and were you just like a big surfer, or what was the
no,
Nicaragua draw?
my wife is from there originally. Like we met in New York. She went back to Nika right before like the COVID lockdown. I came essentially like visit her, and then like the whole world imploded and they shut down the airports, and I was there for 2 years, but we
Where
survived it. And we
where
still,
I love Nicaragua. I love all of Central America. Such a great vibe. Nicaragua has had its moments of kind of,
yeah,
ups and downs over the decades, but where were you guys in the country?
all over. But like we spent most of the time in like Managua, even though like Managua itself is not, even people from there don't really like think of Managua as like the most fun place or most beautiful. It's just like very central. And the awesome thing is you could literally like every weekend go to a totally different microclimate zone beach in an hour, max 2 hours, and you're in a totally different part of the country. So that was pretty awesome.
We did sort of like a 1 or 2 week trip, my wife and I, pre-child, around Nicaragua. I actually had a work conference down in um, Rancho Santana once, which is down near McCool, which is like the super fancy resort, but there's some beautiful surf breaks down there.
Oh
Um,
yeah.
but beautiful location. But I funny story where we went and stayed in some, like eco lodge on the lake,
Yeah.
beautiful. And I'll put the name in the show notes. I can't remember it,
Yeah. Let
but
me let me know, because it's possible my wife managed it. I'm not even kidding. It's
oh,
very
really?
possible the place you're talking about is, yeah.
Um,
Yeah.
and but we had this hilarious moment where we went out paddleboarding around the lake, and like some of these Central American storms, it's like being in Colorado or something, where it's like a beautiful, and then within like 5 minutes it's like
Yeah.
monsoon, and we essentially are like
Oh
these
yeah.
two gringos just drifting away in the
Yeah.
middle of the lake. And eventually they came out with a boat. They're like, what are you guys doing? Come on, let's go
Yeah.
back in.
Lightning storms there are like the most intense thing I've ever seen in my life.
Yeah, it was crazy.
Yeah.
But we had the best time. I mean, I remember we were just driving, we had a pickup truck, and driving through a town, like a whole bunch of locals just jumped in the back seat, so default hitchhiking for a while, and then hit the top of the pickup truck, time to get out. Beautiful people, beautiful country. I need to get back down there.
Have
Awesome
a
spot. So
systematic trading convention.
I'm in, man.
Nicaragua
We
style.
will we can we
We'll
can
do it. I'm surfing.
coordinate on that.
Okay.
I'll ping you later on the eco resort on the lake. All right. So you were down in Nicaragua. What's the inspiration? So tell us real quick what Composer is. We'll spend a lot of time on this, but
Yeah, for
I
sure.
want to hear the origin story on the inspiration.
Sure. So first off, as to what Composer is, I mean, Composer is a trading app, but instead of centering the experience around individual stocks and sort of like manual discretionary trading, like most retail trading apps, we center around trading strategies, specifically systematic trading strategies. And we offer customers sort of two main gateways to get exposure to systematic trading strategies, these automated trading strategies. One is through a library of pre-built strategies that we've sort of curated and built internally, or increasingly that our community has built, that we've thoroughly vetted and we have some confidence in, that cover a range of different styles. So that's one pathway if you really want to, you don't want to build something from scratch. Or you have this other gateway, which is to actually build your own trading strategy from scratch using our no-code visual editor. And that no-code visual editor makes it really easy to combine and, yes, compose, hence the name composer, using those building blocks to construct basically, a very large percentage of anything that you could imagine you can accomplish through our editor.
So were you more, so was the name origin, are you more of is this like the Verve Bittersweet Symphony? Were you more of a classical fan? Like where'd you come up with the name composer and symphony?
Yeah, so like definitely like they're definitely trying, there's a music illusion there that's kind of personal. Like when I was younger, I thought I was, I wanted to be a musician or composer. I think I had the good sense to realize I did not have the raw talent to ever do that professionally pretty early. But kind of had that early, like late adolescent, early 20s crisis to realize that that was not going to be my career path ultimately. But I've always loved music, so that's part of it. And then like it's a little deeper than that. I mean, it's also this concept of composability, which is to say that the way that we've built everything is that like all these building blocks that you use in our editor can be composed with. So in other words, you can use them to construct larger strategies. So a strategy can be composed of like a sub-strategy or a subset of logic or assets. And then you can keep sort of stacking them together like Lego blocks in this sort of almost like Russian doll sort of structure. And that sort of thoughtful way of thinking about software design makes our software very extensible, very modular, and just very, very easy to keep extending. So like every time we add a new feature, it has this sort of like multiplicative effect with all the existing features. Like it harmonizes really well with everything.
Well, good. I'm excited. I'm excited to dig deep on this. We're going to spend a lot of time on the symphonies, but I want to hear like, you're hanging out in Nicaragua, and maybe it's before that, and you're like, all right, this Robinhood account I got is garbage. Or maybe you're like, look, this target date fund is just not doing it for me. What was the initial inspiration? Did you come from a traditional investment bank background, or where you were like, working for a hedge fund? Like, how did you come to the idea of composer?
Yeah, so I was like my like last real job, I was an executive at a company called Breather, which is like a workspace as a service company. Definitely, it wasn't finance, was real estate.
And what does workspace as a service mean? Is that like WeWork?
Yeah, exactly. So it was in that similar vertical. In this case, it was like private spaces that you could book on demand. Is frankly a little wacky. I can say that now. Raise a lot of venture capital.
Have you watched the new We Crash documentary?
Oh, yeah. I feel like I lived through a microcosm of that a bit. It was.
Well, it's fun to see because my wife. I mean, and so I think you're Newman in this one. You love tequila. Is that the situation? You love silent disco parties. But my wife knows nothing of this story. And so it's kind of fun to see it through eyes. She's like, this can't be real. And I was like, oh yeah. I remember when the S1 dropped and this was just like, oh my God, like this serious situation.
Of course, if Adam Newman was in crypto, he would be celebrated like right now. Oh my God. It's all about time. Yeah. Everything's time.
100%.
But yeah, I lived through like a microcosm of that. I mean, we raised a lot of venture capital, but like, although it feels very small compared to WeWork, because everything feels small, we were like $100 million and, had tons of employees and all this stuff. And I left when I kind of saw the writing on the wall. I think I was less the Adam Newman character, of course, more the guy trying to keep things together.
Miguel.
However well. Yeah, of course, that's the, maybe that's flattering, but that's how I see it. But but anyways, so I left, and during that period, I had some liquid savings, not a ton, right? But like enough that I'd been so busy that I could just like knew that I needed to do something with my savings, and I was like, this is a good project. And then like backstory is like I've been interested in trading, investing since I was a teenager. And then I had this background in data science, right? Like I really like before I kind of got into the dark side of management. Before that, I was a data scientist. And I was like, well, what if I applied sort of like my data science skills to investing? And I think that's been like the sort of discovery path for a lot of people and like the sort of DIY thing. So like a lot of people, I started cobbling together these like hacky R and Python scripts and trying to connect it to the Interactive Brokers API. what I was trying to do was just implement some like really, really simple strategies, like very watered down versions of like risk parity, for example, like really simple. And like reading like Ray Dalio's like white papers on, on risk parity and things like that. And then struggling mightily. And because like the difficulty is extreme when it comes to trying to implement some of the stuff, because the tooling is just was not there at all. And so even if you wanted to implement a really simple strategy, systematic trading strategy, it just took hundreds of hours of dealing with all kinds of crap and incidental complexity that had nothing to do with actually anything intellectually, frankly, that interesting, but just you needed to do it. And that was when the kind of like the early light bulb went off. I still had no interest in like commercializing anything. Like I was like, okay, this is like an interesting opportunity, but like, really it started with me sharing what I was working on with friends and family. And again, I was like, look, I'm not licensed to manage your money. I can't do any of that. But they were pushing me like, please, can you manage my money? Can you invest my money using your trading strategies in these like Python scripts? And my answer was like, no. But I was like, but like I can set up a Slack channel, right? And maybe like print some trades and you can copy my trades, right? But like, hey, it's not investment advice. I'm not licensed, like, but like buyer beware, right? Like kind of thing. And so I set up this like Slack channel that would print these trades. And when I really realized like, okay, I need to bite the bullet and do this as a job, is A, I was spending a lot of time on it. B, whenever my little like Slack bot broke and it wasn't printing the trades, people would get mad at me and be like, well, can you fix it? And I was like, well, I have a real job. Like I'm not getting paid to do this. And like one friend was like, well, can I pay you to quit your stupid job and do this? And I was like, okay. That's a sign there's some market pull for this idea. But it grew very bottom up like that. It wasn't like like sometimes like you'll have MBAs who like, they're in a class and they like look at like some top down market opportunity and say, okay, I'm going to go raise a bunch of venture capital and address this market. It grew very serendipitously, very bottom up. And we incorporated almost exactly 2 years ago and raised some like pre-seed financing, shortly after that. But that's the origin.
So you have this, as every entrepreneur does, and I'm saying this as a compliment, by the way, because I put myself in the same camp and we have a lot of startups on here. You have this naive optimism that every founder has, that like, you know what, I can do this. This is an idea that needs to be birthed into the world. What was the next step? You're like, all right, I'm going to straight up incorporate and start, or were you like building it and then kind of actually started to give us, where are we on the timeline? What year would this have been? And kind of what was the next steps for this?
Yeah, this was April. I can't believe it was that long ago. Yeah, April 2020.
Okay, so the depths of the zombie apocalypse. You're like, I got nothing else to
apocalypse.
do. I'm going to think about investing.
Yeah,
starting exactly. A company.
I had actually, so this is wild. It's not even my LinkedIn. I had started a job as like a head of data science for a pretty big company, and like I essentially lost my job like 2 weeks in. I mean, like before I started, essentially everybody who'd started in that period, they freaked out because it was in a very travel sensitive sector. So it's a super cyclical sector. So they just furloughed most of their staff and rescinded all the offers to new hires. So like I didn't have a job. I was in Nicaragua stuck. And so like in this really weird state. And then I actually reached out to 2 close friends and said like, look, I have like something actually to focus on, to work on, because it happened to have become this sort of like obsession anyways. I think there's a real market or commercial opportunity here. Can't pay you anything, obviously, but if you want to come work on this with me, I'll give you equity and we're going to work on this. We're going to have a Zoom call tomorrow and we're just going to start doing this. And those are my 2 co-founders, Ronnie and Ananda. They're both people that I've known really well. Like I trust with my life. Like, so I knew that like I could trust them and that we could actually work together remotely in this way. And they both were available as well because of the situation. They're also in travel sensitive sectors. And cyclically, sensitive sectors. So we just kind of got together and started jamming on this. I was literally getting like relief payments from the Canadian government. And I started using those to pay for our first designer, who's still our head of design, Mikhail, who helped us to mock up some of the very first prototypes. So we use this software called ProtoPie to basically create these sort of somewhat high fidelity prototypes of what Composer would look like. But it was mostly just like a video that plays back. It wasn't like an actual product, right? Like, so at this stage, we're really just like, it's an idea. Because I had these scripts, and the idea was like, well, let's actually create this visual no code editor that's interactive, so that people could build this stuff without having to ask me to like modify a script, and so we had this idea for what this sort of composable visual editor would look like, and we created that demo in ProtoPie, and then we built out a deck to raise financing to actually build it, because obviously it's like a fairly ambitious project, so it was going to take engineering resources and legal resources we knew, and all of that. So it all started with this demo.
All right, so you start to build it. Give us, because this isn't too long ago. Let's kind of just walk through it now. We briefly kind of highlighted the beginning, but I assume the initial inspiration is pretty similar to what you guys are doing now?
Yeah, I mean, I was thinking about that recently, actually. It's like, we've learned so much. Like, every startup, we screwed plenty of things up, plenty of things that we thought were so just weren't, and all of that. But interestingly, if anything, we cycle back. We always end up coming back to the initial vision. It hasn't actually changed that much at all. And certainly I wouldn't say, when it comes to the core of the product, we really haven't pivoted at all. And it's been 2 years, okay, which isn't that much time, but in a startup life, that's actually a fair amount of time. A lot of people, like, they throw everything away. That really isn't the case. So I think that's a little different in some ways. So some ways that started very lean, and we've always been like really like pretty lean in some respects. Like, our only expenses are basically staff in the office. It's all distributed. We always try to do everything on like starting out on a shoestring budget and all this. But like, the product, like, we didn't do this thing of like throwing spaghetti at the wall and then rewriting the product. The core idea behind Composer is remarkably consistent since the start, but even before 2 years ago, frankly. Like, some of that ideation had really began a year before that, before we even incorporated it. And that initial ideation, it's been pretty consistent.
All right, so I'm going to pull up the website. Listeners, you can go to Composer. What's the domain?
Composer.trade. Composer.trade. Yeah.
I think how's that? That's even like a domain you can even do now. That's cool. Maybe walk us through like a concept. You talked about risk parity, but you can pick one that you like. It's a well-designed website. It's got some hashtags for some ideas, including a few Faber research papers in here. So
and that's before we ever got linked up. That wasn't
yeah, no, it's good.
That happened organically. Yeah,
I'm sure these are the worst performers on here, so but I like it that they're
because it's not overfit.
Yeah because
you didn't overfit.
So maybe walk us through it. So like, somebody comes to your website, signs up, which I have. What's the next step? Just kind of give me an overview how this works.
Yeah, well, I mean, the first thing we would ask you to do, of course, is to complete the KYC, link your bank so that you can actually fund an account and get going. But right after that, the main page that people land on is this Discover page. And that's our library of what we call Symphony. So Symphony is just our term for a trading strategy. And like, a Symphony, the way we think about it, is like a container for a trading strategy. What's so cool about Composer is that we've created this really like a new abstraction. Like, if you think about like an ETF is actually a really powerful abstraction in that, like, you can buy and sell this single ticker and people just take it for granted. But it's actually this incredible innovation. Like, I know you know that, but a lot of people don't. There's a great book that came out recently called Trillions that talks about this a lot. But the idea
was that Wrigglesworth's book?
Yeah, exactly. It's an awesome book, but there's the whole chapters on this, like the whole, like, all the innovation that had to go into like the creation and redemption process, and the idea of, all of that, it was a really sophisticated innovation to make ETFs liquid enough to trade during the day. But an ETF is really like a container for a set of assets, if you think about it that way. And a Symphony for us is like a container for not just assets, but like actual logic. So the assets could change, but it's a container for all the logic that would define a trading strategy. So like, I'm going to pull up this first one you see, is stocks or bonds, ride the winner. Like, this is a super simple strategy. So if you click on that Symphony, stocks or bonds ride the winner, you get what's called like our fact sheet. That's like a prospectus, like what you get as a prospectus. And if you scroll down a bit, it has a natural language description of what this Symphony is doing. And so you can see here, it just says every month, ask whether the SPY, S&P 500 ETF, 60-day cumulative return is above the TLT, which is like 20-year plus treasury bonds, 60-day cumulative return. If it is, you hold the S&P, you hold SPY. If no, you hold TLT. This is like a super simple hello world strategy. I'm not saying it necessarily is the best strategy, although at least on this back test, it actually does outperform in risk adjusted terms, the S&P. Whether that will continue, who knows? But this is like a really good sort of like proof of concept of understanding this. So then like you have this back test. I can see how it's doing, and I can follow it. I can click a follow button, and I'll essentially like paper trade it, right? Like I can follow it and see how it does like going forward. So it's only forward testing or paper trading. Or there's this invest button at the top, and I can actually click that, and then I can choose, and then I can choose the amount I want to invest in this, right? Like I can actually say like, okay, I'm going to put $1,000 into this, and then assuming you have your account set up, it will actually start executing those trades at the next trading window. So that's around 3 p.m. every trading day. So it'll queue, and then it'll start executing at 3 p.m. in that trading window. And right now, this trading setting is at monthly. So the logic will run every month, like on a calendar-based rebalancing. Now, like that's if you just want to run this strategy. The cool thing is if I go to the top right, I can click edit a copy, and I can modify every piece of this. So that's the other really innovative thing here versus like an ETF or a normal fund. Like there's a limit to the customization or transparency of those things. In this case, like it's transparent to the point that you can actually edit every component of it. So I can edit it, and then I can create a copy and do whatever I want. So like here I'm in the editor. I have this conditional. It says if the 60-day cumulative return of SPY is greater than the 60-day cumulative return TLT, like I can change all the parameters here. Like I can, instead of 60 days, I could put 20 days, right? Instead of SPY, I could put QQQ, right? I can edit every piece of this and save that copy. I can invest in it, and then I can also share it because all of this is all browser-based, right? This is like, it's a modern web-based application that's highly shareable. And so I could, once I've created something, I can share this with my friends or family. And again, that goes back to the origin story. The original inspiration is I wanted to be able to share stuff with my friends.
Well, I mean, you guys got that. I actually get a lot of emails about this. You guys have your interpretation of the Dragon portfolio, which is something we talked about with Chris Cole on the podcast. We get a lot of people always asking us, how do we implement the Dragon portfolio? Now I can say just go to Composer, stop pestering me. But you got the Swensen, the Markowitz, the Dalio, the Buffett. So tell me a little bit about how much of these symphonies are y'all designed, so Composer designing them, and then what is the community aspect like? So could I just go in and crank up a symphony and share it if I wanted to, or keep it private? How does that work?
Yeah, I mean, well, because you're a star, you could definitely create one and we'll put it on. But we don't have like a totally self-serve two-sided marketplace yet. So you'll see here in community, we do have community symphonies, but these are heavily curated. So You'll probably recognize some of these. These are like well-known creators that have published these here. And the reason for that is frankly, like if you follow this space, that a lot of these two-sided marketplace for strategy idea, like nothing's totally original. That is a concept that has existed for over a decade. A lot of them are frankly garbage. And the reason why is because of serious principal agency problems. Like there's a real incentive to just flood it with junk because it's like a free call option, right? Like the strategy is shit. Well, the creator doesn't lose anything, but if it works, you actually end up making money. So that creates the incentive to just flood the supply side with crap. And
what's the amount of history you guys have as far as the engine that can backtest? Is it dependent on is it all ETFs? How's it work?
Yeah, it's all tradable, all liquid, basically all liquid securities that trade on major US exchanges.
So it's not
So
just
it's,
ETFs. It could be,
oh no, it's stocks. Yeah, it's anything, any cash security basically that's above a certain volume. Like we don't do penny stocks. But yeah, no, we have we have everything that trades on the major exchanges.
let me
It's basically all cash securities that aren't penny stocks
let me tell
in the
you
US.
why I like what you guys are doing. And so I've used a lot of these platforms over the years. I mean, I go way back, like I'm old school. I'm showing my age where, I used TradeStation in the night, it must have been the 1990s, early 2000s. And TradeStation, similar idea and concept, right? Like but the challenge is TradeStation had its own programming language. So you had to learn what they called, and I think it was called easy language. And let me tell you, there was nothing easy about easy language in TradeStation. And this comes from an engineer, right? Like I programmed in college. And so all throughout the 2000s, I used probably every possible iteration of software off the shelf. A lot of different companies have tried similar ideas to yours, but almost always it involved heavy programming. And that, I don't know what percentage of the trading market that excludes, if it's 90% or 99%, but it's the majority for sure. And that
I
is
think
a
it's
huge
99%.
barrier, 99%,
Yeah.
huge barrier and
Yeah.
pain.
Do you know why I think it's 99%? Is because I know how to code too. And that's what I was doing. And it sucks because it's like, I even enjoy it. The problem is that like, who has time for that? And also as you get older, like you lose your chops. Like I'm not a skilled, I've atrophied, right? Like that happens. And then and that's usually when people start accumulating more savings. So you're basically alienating people, right? As they start to actually, they move into like management roles or they stop coding. And they're not up on the latest tools, and then they go into it like they're going to be too busy right when they actually have the liquid assets to really start doing this stuff. And then they have all the people that don't know how to code. So like a lot of our early users are actually engineers. So they could theoretically, I mean, like good engineers too. We're talking like very capable ones, like principal engineers at Google and Facebook, like killer engineers, and they want to use a no-code tool. But yeah, I think that the problem with those past attempts you were referencing is that making something flexible and usable at the same time is insanely hard. Usually like you can do one or the other. It can be really flexible, but it's impossible to use, or it's highly usable, but it's like one of the robo advisors, or it's Robinhood, right? Like it's not powerful. Usually you have to trade one for the other. So the UX challenge for us is like was the hardest initial thing. That was like the core of this. It's like, how do you define a visual interface that's flexible, but that doesn't give someone, an aneurysm trying to use it.
Yeah. Well, y'all's is fun. I mean, I kind of started to go down the rabbit hole, and I was like, I got to stop, because this is just like, it's seductive on how easy it is to kind of drag and drop and play around. But you can see how this to me is a much different experience than anyone who has worked with a lot of these platforms. And I'm blanking on a couple of there used to be some managed futures ones and on. And I go way back. So I even remember sort of the crowdsourced stock picking platforms like Marketocracy back in the 90s.
Yeah.
Do you know them? I think
I was on them. I was like a kid I was on that. Yeah.
I wonder if their funds still exist. Existed a few years
You remember
ago.
that? Yeah, they created like a crowdsourced mutual fund or something, like a Marketocracy fund. Yeah.
So, for a lot of startups, you kind of have your vision, Ben's vision of what he wants, and starts building. But then once people start pounding on it, you often have this experience of realizing that people are using it in different ways or wanting different things. What's been sort of the iteration process after some of the beta testers have come on? What did they seem to be interested in, and requests that was really different than kind of like what you guys started building?
Yeah. I think one of the biggest learnings is the importance of the discover page, that the people could use the interface. So we solved that UX challenge. it's still, the problem was even more fundamental, which is like, people would be like, well, yeah, but where do I start? Right? Like I need, people want help to start with some sort of inspiration. So the more and more we talk with people, we talk with hundreds, if not thousands of people at this point. Now you start to, I've really started to appreciate, that's why Netflix, or I shouldn't mention Netflix right now, maybe, but, or Spotify or any of these companies, spend so much energy on search and discovery and sort of like surfacing things and sort of that homepage and the recommendation algorithms and all of that. Like you start to realize why they spend so much of their R&D budget and so much of their resources on making that first experience great. So like, it's like that, and then just like onboarding, right? Like education, learning, making that, making it possible for people to understand these concepts without dumbing them down, but making them accessible. Like that's a big part of it for sure.
Well, I mean, there's certainly a ton of literature on the concepts behind a lot of the ideas you guys present. We always talk that maybe this is an idea for you guys, it's just too much work for me. But a number of writers over the years have written books, of course, on the topics of system design and trading. There's probably a dozen that are actually pretty awesome, and different flavors, of course, but also there's been newsletters. The late Nelson Freeberg had a really great one called Formula Research that he wrote for a long time. And I remember when I was a young kid being unable to afford his subscription, which I eventually got and became friends with him, was able to buy all the archives from somebody in Germany. Literally, they mailed me this like box of his newsletters from how 10 years or something. But a ton of it. Are you familiar with his work at all, by any chance?
Can you say his name again?
Nelson Freeberg. And a lot of his work kind of overlap with Ned Davis research and stock market logic. These are old school books. And so but a lot of the concepts bubble up into some of the ideas that you've seen, not only from me, but from others. And he would profile a lot of systems and write about them. If you're super nice, I'll send you copies of all the old letters.
I love that.
But it's work that's been done by a lot of famous people, but it's a good, you spend dozens of hours reading about these systems. But like you said, for someone who's starting from scratch, it helps to have that, journey on, hey, here's a sample system. Here's some ideas you can play around with. But your site is like, it's got a great user interface. So kudos to whoever designed it on your team.
Yeah, I mean, well, it's not one person, but yeah, I mean, and shout out to the team. It definitely, most of my job is just getting people more talented than me to actually execute this stuff and build it. But yeah, I mean, our design team's incredible.
So what's been some of the most commonly observed symphonies, as well as most esoteric, where you see something you're like, what in the world? What do people gravitate to? And it's got to be the word crypto, I imagine.
Well, we haven't integrated crypto yet. When that comes, I'm sure that will be really, really popular. Definitely the sort of high level answer is stuff that involves leveraged ETFs,
of course,
which actually makes total sense. And it's not as ominous as it sounds like, because I think, oh God, they're going to blow themselves up. It makes sense because Composer actually makes it possible to use leveraged ETFs, at least somewhat responsibly, instead of just holding them and dying from the volatility decay. We actually have stuff like, risk parity type weighting, and it allows you to, and systematic rebalancing, so that you're not getting killed, and you can actually use them in interesting ways. So yeah, it's been really popular among people looking for.
Well, right. It makes sense, because if you're just going to do something plain vanilla, you don't need to have a Symphony to do it. Like, you can just go buy and hold and throw it over here and be done with it. But it really is more of the, like, how do I build a hedge fund of funds that can cobble together? And is there that Russian doll nesting? Are you seeing people do that? Are they cobbling together? Is it like Inception, where they have like 50 different systems? What's the typical way people are kind of doing it?
Yeah, I think I think that book, The Man Who Solved the Market, influenced a lot of people. And sort of this concept of like more and more it's coming out in the financial media about how multi-strategy is killing it. Like that's where all the money's going on the institutional level. So then the more sophisticated retail people are like, okay, clearly there's something going on with multi-strategy here. Like a lot of the best funds are multi-strategy, and sort of running this, this set of uncorrelated funds. So yeah, we have one power user. He has like, I think 100 strategies running in parallel at one point.
Wow.
It gave our engineering team a lot. Like he was like a really early beta tester, and like that was one of the greatest like tests of our system.
I was gonna say that's the kind of beta tester you want, just
yeah, he was blowing shit up in the
adopter.
beginning. Yeah, it was awesome. He's like, no, I want to have this black box of like over 100 strategies. We're like, okay, that might actually be overkill, but like this is a great QA test for us. So give it to us. So he had 100 strategies, most of which were trading daily, and so we had to like firefight that in the beginning. But I mean, it really like proved the stability of our systems. So that was pretty awesome.
Well, it's funny you mentioned the book, which is Profiling Rentec's Jim Simons, which listeners, if you're not familiar, is the best performing hedge fund of all time. I actually randomly ran into him hiking in the woods in Long Island at a wedding once, and I was like joking with my wife, who comes from not our world, and I was like, "Do you know who that was?" She's like, "Who? That old man?" And I was like, "Yeah, that's." She's like, "Okay, cool, like great." I'm like, "That's like the Michael Jordan of our industry." She's like,
Yeah,
"All right,
it is
sweet,
yeah,
good for you." Anyway, so where does the platform stand today? So if I wanted to go on, if you're listening to the Meb Faber show, say I'm going to go implement 5 of Meb's models, and I'm going to just like click. Can I actually implement them and invest today, or is it pre?
Oh yeah.
And how does that work? So tell me. So all right, select 5. Click invest. What happens?
Yeah, we actually execute the trades for you. We're actually we're becoming a broker dealer. We're already live as an RIA, and we have a white label partnership with Alpaca. So they handle our trade execution, but it's fully integrated with our software. So you actually fund a composer account, transfer funds, and when you invest, you can invest on real money, and it will execute the trades automatically for you. We don't custody assets, obviously. Like it's the assets are custodied at SVB, BMO Harris. So you don't have to worry about having a startup custody your assets, because a lot of people ask us about that. But the nice thing is, from the user's perspective, it feels like all one seamless integrated experience. You don't have to like try to stitch together, one account here and one account there. You just fund your account. Everything runs there. You can manage everything there. Like you would with like a typical brokerage.
And so people are doing that, right? So like when did that go live, and like what's that experience been like for some of these early users?
Yeah, so that went live, the full brokerage experience, like a couple months ago. It was pretty recent. And I mean, obviously I'm biased, but just going off of what people are saying, I think it's been awesome. I think the jump in sort of quality of the user's experience has been enormous. Before that, what we were doing is you could like separately set up an Alpaca account and then like authenticate into that Alpaca account from Composer. And frankly, that was just like not a great user experience. It was just very cumbersome to like have one account and have to link it to a second account. And it just didn't feel that like stable. Whereas like controlling the end-to-end experience has just been great. I think people are just like a lot happier with the product. So
how does the actual sausage get made? So
Sure.
like because I feel like my nervousness is like, all right, I designed this multi-factor system. I'm going to birth it into the wild. It's going to start trading next Monday. And then you kind of sit back and watch, and I'm sure the first day or two is a little nerve-wracking for some of the users or you guys in the early days, but I'm sure it's fine now. But what's that experience like? Is it let's say it hits a trade, what does the actual implementation look like?
Sure. Yeah, so it executes market orders, but at the around a 3 p.m. trading window. So towards the end of the day, one thing that we definitely really focus on is the quality of order execution. So I mean, from the spreads we're seeing, it's lower than most retail trading apps. It's definitely good, but they are market orders at the end of that, towards the market close is when they actually.
So the lesson is you definitely want to be, not mucking around with some really liquid stuff. Like you want to be
No, we try to
trading
block
some,
that actually. And we'll even
yeah,
tell you, we've even gone so far as to actually notify people, like we don't recommend trading this.
right.
We really try to make sure. And the other thing that's really cool that we have is we actually allow you to estimate slippage. I've never seen a retail trading app that does that. They actually they all try to hide it because a lot of them make money. The worse and more illiquid the spreads are, the more they make money. We're really playing a long game here. So like we actually in the back test allow you to input. It starts at like a 5 basis point model where it adds in a 5 basis point spread, so that the back tests actually account for slippage and spreads, which is about typical about how much you pay. So like, and it will even estimate the dollar slippage based on turnover, spreads, all of that, to try to give you a sense of what you'll lose from the spreads on these market orders. And then in the future, one thing we want to do is offer like a premium version that you pay, but where we do more advanced order execution on our side.
I'd love to subscribe to, and I imagine you guys would probably want to do this for free because it would be like a a content strategy, but something that would write about various systems and ideas, maybe monthly, maybe weekly, but there's so many famous systems in history, everything from dogs of the Dow to, we obviously felt this when we wrote my first white paper, whatever that is, 15 years ago now. There's definitely an interest in quantitative type of strategies, and people love to read about it. I remember even the old Larry Connors books and James Altucher, Trade Like a Hedge Fund, and in some of these concepts that have been around for, some of them decades or 100 years even. But to me, like that's endlessly fascinating. So maybe an idea for you guys at some point. What's been your what's Ben's favorite symphony so far? Or you can answer with up to 3, but like what are you attracted to at this point?
Yeah, I'll tell you like basically what I invest in. I created my own custom symphony. That's not even public yet. That will come out in a bit. But it's a take on risk parity that also has sort of a risk on, risk off mechanism. So it kind of combines a bunch of things, and it's basically it's a symphony that I think will continue to do well during sort of rising rates regime, because obviously bonds are getting treasuries are getting crushed as rates are going up. It's like the biggest drawdown in a while. So the idea was to actually balance sort of the traditional risk parity sort of between equities and bonds with some things that will do well in rising rates and with inflation. So balancing that with, for example, bullish US dollar futures, gold, and even financial sector ETF. Yes, because financial sector ETFs continue to do better as rates rise because of the increasing net interest margin, things like that. And then it kind of like adjusts based on volatility of the bond and equity markets. So that's sort of my favorite is my custom one. I also really like the Dragon Symphony just because it really leverages the power of Composer. Like that one has all these like nested sub symphonies in it. So it's kind of, and like you said, it's cool because like that one is so hard to implement for retail. There's still things that I wish we had that would make it even better. For example, like there really is no great long volatility strategy for retail. Like there's only a couple of these VIX futures ETFs, and they're not super well constructed. They're not very capital efficient compared to like if you're doing it with like futures or options. There's just better ways to get long volatility exposure. But one thing I really like that's actually just like a building block that like allows you to hedge volatility without having something that's like super negative expectation. So like combining, gold, different currency futures, different things like that, that when you combine them into a symphony are actually, it makes a very useful block where it actually has like a roughly, slightly positive expectation, but is inversely correlated with the market, which is really nice because most of the VIX stuff, obviously, like, the VIX ETFs, they're very much negatively correlated with the market, but they're also massively negative expectation if you hold them over time. So that's some of the stuff that gets me most excited. But yeah, it's hard for me hard me to give one answer. I also love the momentum stuff.
Yeah. Well, I was,
Momentum is fun. Yeah.
I was just digging into the dragon, and it's fun just to like look through the weights and easily, you guys, this is so customizable, but it it's pretty cool because it shows you not only that, it shows you all the stats. Pretty good Sharpe ratio and drawdown, survived the pandemic, and is doing a-okay over the past decade versus, it's the fun thing about this too is that you guys have gotten ahead of is eventually, who knows when, we'll have another bear market in the US stocks. Maybe it's this year, maybe it's 2025, but you tend to see a renewed interest in trading systems and diversification and other versus just the buy the F and dip for the past decade, right? Like this culture of only owning these high growth, and a lot of the growth names have been kind of taken to the woodshed over the past year. So that's lost its luster, but even the S&P is still hanging out up around all-time highs. What are we, within 5-10%, I think, at this point? But but eventually, when that, and it's normal, totally normal to have these bear markets, but eventually when that happens, you start to see a renewed interest in how to protect your booty, and also other ideas that not only can defend against it, but also potentially profit too. So we'll see.
Yeah, I think that most retail investors heavily underestimate concentration risk. Like they really just don't. Like that's like the biggest thing if I were to impart something to most retail investors, even the smarter ones I know. Like I know some really smart retail investors, but like they're really hung up on like identifying like the right handful of stocks. And I'm like, you could be really good, but like I could still beat you. if you like, I will beat you on risk adjusted returns long term if I don't have that level of concentration risk. It's just like very hard. Like the odds that you're the next Warren Buffett is just very low. When you're that concentrated, it's just, you're going to get at some point, particularly people tend to concentrate in the industries they know. So my industry, everybody concentrates in a handful, in like software. Well, like you're going to get a ridiculous drawdown if you do that. I don't care how much the industry, like you'd be better off having way more diversification. And if you want to take more risks, then yeah, you can use some leverage, but that's actually smarter than just having this insane concentration risk.
How do you guys find people other than the Meb Faber show and Acquired? We heard you on. It's a great podcast. Listeners, is it you getting some Wall Street Bets community? Is it the AAII? Is it
we are actually we're starting to, yeah. It's not one thing. We are starting to get some attention on Reddit. We saw that some of the comments were really funny. Someone was like, I saw like one comment was like what does Composer Trade do? When someone said like, I use Composer.trade. And then someone replied, it composes trades. And I put all this up. They're just such assholes, but it's really funny. It's that. Some mentions from some thought leaders in newsletters on FinTwit. Some people have shouted us out on FinTwit. It's been mostly those things versus say like Facebook and Google ads. So it's not really like display or any of that. It's been mostly like organic or semi-organic mentions from influential people has been the main route people have discovered us. And then the other thing we're doing is spending time just talking with people. Like literally, like we get a lot of signups, and then we're starting to really just schedule calls, talk to people. I've been speaking at schools. Like I spoke at Wharton recently.
Cool.
Yeah, that was cool. I spoke at HBS. It's cool. I'm getting invited to speak at schools that I neither got into nor could afford to attend.
Right. So. Well, what's there's definitely and others have danced around something similar where there's also a social element that I don't know if you guys are trying, but eventually could be part of the plan. You can correct me either way or say why it's stupid or why it's interesting, but the concept of having people who build I imagine at this point, it wouldn't be necessarily like single systems, but it could be an entire Symphony grouping of like, here's my fund of funds that I'm doing with these 15 different symphonies that I've created and blessed or whatnot, that somehow there would be a subscription fee or revenue share or something that like, if you had certain people doing that is something. Okay. Can you tell us more?
Marketplace is coming. Yeah, we're going to have a marketplace. Like I was saying earlier, it's going to be heavily curated. I do think
How do you curate
crowdsourcing,
it? That's a challenge there too, because
yeah,
like, you know, that we
yeah,
all
it
come
is
with our inherent biases, and
totally.
you say, man, that's stupid. Why would anyone want to invest in that? And it turns out that like a lot of people want to invest in that. What's the thought process here?
Yeah, so we have like an internal investment committee that's like multidisciplinary. Like I really think it goes back to like sort of like data science days. It's like, yeah, if you have enough, you know, even if you have a high variance, you're not super accurate. If you have a diverse enough number of predictors, you average those and ensemble them, you tend to get better decisions and cancel out some of the bias, right? So having like, it's always say like having diverse perspectives, I think helps. But yeah, I agree. It's not like we haven't solved for this entirely. I don't think, you know, that's an ongoing, that's a very difficult intellectual challenge. And I think, I mean, first to say, I think crowdsourcing alpha is like super, super hard. A lot of people have tried that, generally fails, right? Like it's very, very hard to crowdsource alpha. I know Quantopian tried that, and I have a huge amount of respect for those guys. It's super innovative, super important company. But ultimately, like as a business model, like crowdsourcing alpha is really tough.
What do you think? And you know, we knew those people as they were going. What do you think was their main struggle? They raised money, they had a big community. Like what was their challenge, if you even have an opinion on
Yeah.
it? But like, did they have something where you're like, you know what,
Yeah.
that seems like their fatal flaw, Achilles heel?
Yeah, I mean, fundamentally, the business model didn't work, and it stems to they were trying to crowdsource alpha. So they had this community. The problem was they were like almost shorting their own user base, in the sense that the more users they got, the more likely the strategies that were being submitted were shit, because the more likely that it was just spurious, that it was just like p hacking basically. So like then like the CIO is almost at odds with the CMO, right? Like CMO wants more users. The chief investment officer is like at that point, like, no, I want less, because they're actually like making it impossible to figure out what's just like overfit crap. And so my understanding is, you know, they got money to run through these crowdsourced strategies on institutional money, and they just didn't work, because generating alpha is just extraordinarily hard. And there's an adverse selection process where, generally speaking, the type of people who just anonymously submit stuff are not going to be the ones actually generating alpha. The people that can really do that well are actually working at a hedge fund, right? Or there was like my understanding, a lot of these platforms, they actually have this whole like maturation process where they practice its training wheels, and they actually do get a lot, but then they like churn and go work for Citadel, right? Like, and then you lose them. And so that's why, I really think Quantopian is an unsung hero. Like the amount of positive externality that they generated for the industry is insane. They taught so many people quant trading. It's just so many funds actually absorbed the economic value they produced. Like I really feel for them, because I think they were fundamentally so, you know, some startups fail and they're just garbage. Like they were scams. And that the Quantopia, I mean, it's also, I've met Foss a couple of times. Like it's so obvious that they're the opposite of that. Like they obviously really had good faith, really wanted to contribute, and like the business model, they created a lot of value for the world and just were unable to capture it themselves.
Yeah, it's you know, it's challenge, because as old Charlie says, like, and you show me the incentives, I show you the outcome. And so designing these thoughtfully ahead of time, these communities, like you said, it can, even people within the company can be at odds with each other on how they actually see their goal and their job and what they're doing. That's a tough challenge. As you guys look to the horizon, you know, you're new, you've been at it, but you're growing. What's sort of the future look like? Give us some behind the curtain. You've mentioned a few things so far, but you know, we do this talk again down in San Juan del Sur, or somewhere in Nicaragua, or even up on Lake Ontario, and we're talking in person. I say, man, that's been a crazy year, or 2 or 3 years. What does the future look like for you guys?
Yeah, I mean, this is going to sound grandiose again. I want to redefine active investing, really. Like, you know, what I see is, first, that the universe of things that you can do with this just keeps expanding using the same basic core product. But I really want to move into sort of like the custom indexing space. so that you really have the universes, and then people don't feel like they even need to, they actually, can replace a lot of these less liquid ETFs or thematic ETFs. Instead, you go to Composer, you build exactly what you want in Composer, and then we actually take on custom indexing right there. Like adding other asset types is inevitable. So adding crypto, adding options, ultimately futures. And also as other things become more fractionable and liquid, adding those as assets that can be combined. I think commingling different assets is going to be huge. And then ultimately, I think that there are going to be people that don't want to use Composer themselves in the sense of building things themselves, but they want access to what it can provide. So there's two ways we're going to attack that. One is through the marketplace. Again, it's going to be heavily curated because of this principal agent issue. And then also through RIAs. We already have a lot of organic interest from RIAs and investment managers who are like, hey, can I integrate this with more like my own setup and systems? This is way better, way more powerful than what I have. So building out a suite of tools for RIAs that leverages our core product, but integrates with, institutional grade brokers or prime brokers. That's going to come too.
Yeah, there's so many brainstorm ideas coming through my head. I don't want to distract you guys with Meb's terrible ideas. But
no, there are no bad ideas.
But certainly we can rap about that later.
For sure.
I saw in my notes that you have a cognitive scientist on staff. Is that true? And what does that person do?
Yeah, so that's Anya. She's one of the very first people. She joined us right after Mikhail, I think. And again, like the sort of UX challenge here is insane, right? So it is literally a cognitive science challenge. Like, how do people learn something? How do they understand something quickly that is new and foreign? So she is actually now head of product. She started out in a sort of UX research role. So researching what people wanted to do, what they wanted to see in the product, recording how they used it. So she's like a really, really top-notch qualitative researcher. That was her background. I actually worked with her at Breather. She's like a featured speaker. She speaks at Google and other places, and she was sort of like, she's a preeminent expert on how people interact with different environments, how they interact with algorithms, and sort of taking that qualitative research specialization and then applying it to this domain. So that's definitely, she's like super critical part of our DNA and a huge competitive advantage for us.
What's the biggest roadblock for you guys going forward? What do you think is the big challenge? Is it acquiring customers? Is it building out the sort of knowledge base and education? What do you look at that gives you some brain freeze up there?
Well, I know that the biggest thing is always, I've learned this from Harvard, it's always the thing that I'm not worrying about, always, almost definitionally, right? There's like sort of the black swan equivalent within a company. I've learned like whatever I'm worrying about is not the thing that's going to be the worst problem, because I'm probably already addressing it. So it's going to be something. But I think the biggest challenge, like, I don't worry at all about our ability as a team to execute. Like, we really can tackle any problem. Like, I've learned that, I can, even when we have hard things, like, I now sleep better knowing that we have a team that can execute on anything. So the biggest challenge then becomes, frankly, counterparty risk. Like, we depend on a whole set of people in the ecosystem. And for the things we want to do, the faster that ecosystem can move, the faster we can move. But there are some sort of external dependencies there. I would say that's probably like the scariest thing. Not scariest thing, just like the biggest impediment to doing all the things we want to do. Right. So, like, for example, you have to depend on external data feeds, external brokerage services, custodies, all these things. And particularly with like cash equities or even crypto, frankly, there's a lot of legacy tech. There's regulations around it. And sometimes those things you're just not in control of, right? Like, we can be as talented at work as hard as we want, but if there are sort of blockers in those in the ecosystem in terms of like, the technology partners we use, that can make things slow. So I think that's one of the biggest challenges in fintech. Like, for example, Plaid, I think, is really okay. They're great, but like, it's still they have to contend with legacy bank tech. Funding an account is still a little annoying, right? Like you don't have instant transfers yet. Doing an ACH fund transfer is still kind of annoying. It's legacy technology. We're not in control of that.
Is there a scenario, as you guys think about this at some point, where you guys would have, okay, here's our bread and butter. It's this community, it's the Symphony, it's just what's going on. But you know what? This family office just hit me up and they say, yo, Ben, I got 10 million bucks, 100 million bucks. Can you just build me? This is what I want. Can you build it and run it as a sidecar, as a fund, or start tracking this for GIPs or whatever it may be? Is that something that's possible or not a focus?
In the future, yeah, definitely. I think the institutional opportunity for sort of like, we're kind of like, if you think about our early market, it's more like prosumers, weirdos like myself, right? Systematic DIY freaks, like, and I say that affectionately. But then like the really big market opportunity is more B2B, right? It's family offices, it's RIAs, it's smaller hedge funds. That's sort of the next frontier. So yeah, that's definitely in the cards, no question.
Tell me a little bit about this fundraising journey, what the climate's been like. You got some pretty impressive backers, first round capital, not boring, Basecamp, Draft, some big names. What was that experience like? They get it immediately. They're like, you know what? I like this idea. Or did it take some convincing?
Definitely not right away, actually. I'll be totally candid. Like in the beginning, it was super painful. I would say a year in, it was very easy. Like we definitely had more investor interest about a year into the company's life than we could handle, or that we had space for a level of maturity. When we just, but 2 years ago, when we just had a deck and like an idea, and this is my first time as a venture back CEO founder. So it was also partially I didn't know what I was doing. When I was my first time pitching, I mean, well, I've learned nobody really knows what they're doing. So, but I really didn't know what I was doing in the beginning. And when it came to pitching, and like there's a whole set of things that like VCs look for and how to explain things, and you're at a real disadvantage if you don't know those things. It almost looks weird because they're used to people coming in with like just the way the pitch was formatted and structured and the way I explained it. In the very, very beginning, there was concerns around like the TAM and the total addressable market. And then sort of all the stuff happened with like Wall Street bets and GameStop, and that completely disappeared. And it actually went the other way. So originally we were getting a lot of rejections that were like, oh, we don't know, this is too niche, the TAM's too small. We like just never get that anymore. Right. It's really interesting. So that was also just timing. Like a lot of it was like, some of it was us learning what we're doing, how to pitch and all that. And then some of it was the market just changing and just the market timing being in our favor. That's a lot of it. And then the third was like, we didn't have the connections. Like we really not like, so for context, Packy at Not Boring Capital was the first money in, but Packy would like work with me at Breathers. So he's a friend. So when he put that money in, nobody knew who he was either.
So
they
know who he is now.
They do, but it was a coincidence at the time.
Yeah.
That was luck. So that helped a lot. And that was just luck. So then it kind of snowballs. You get one connection, you go there. But in the beginning, we had no connections to VCs. I've never worked in Silicon Valley. Never worked any of the companies in Silicon Valley that tend to produce founders who or gone to the schools or whatever. I went to college in Canada, right? I lived most of my time in Montreal. That's not exactly like, you don't have a network to VCs there. You can't, not to the ones you want to raise from, not to put them down. Frankly, not the right ones.
As you talk to the VCs, because VCs are weird, they're oddballs in and of their own right. And I love them, but often they see or are attracted to something that may be part of the narrative, or maybe not so much that you were necessarily pitching. What part of this did they gravitate to? Because VCs in general, they're looking for that 100x, this big scale idea. What do you think it was that really resonated with them as you had these conversations?
In the last round, just like the first real round, is 100% product, 100%. Last round, I didn't have a deck. Again, still not professional at pitching. It was 100% the product. I showed up, I pitched. I remember pitching a few tier one VCs to basically like cut me off when I was talking, like, okay, I don't know what you're talking about. Can you just show us the product? We heard it was really good. Did a product demo, cut me off again and said, like, oh, we're just going to send you a term sheet. We don't need to see anything else. It was that,
Wow.
like, in all cases, it was like, there was very little, like, they're like, no, this is, and the reason why I think was they were like, okay, this is weird. I can get why some people think it's niche, but like, it's so different that I think what the better VCs have really realized is that, like, a lot of these markets are so big that it becomes like, it's fine if it's niche. The thing that's harder now is like, are you differentiated? Is there a moat? There's so much money sloshing around, and in part because people are realizing how huge basically software online markets are. But the flip side, there's a lot of competition. And that's where you get these flame outs of companies like Fast or whatever, where it's like, okay, but like, what would you had no product or distribution moat. You raise $100 million, but big market, but there's nothing differentiated. Whereas they looked at this and they were like, okay, this is like highly differentiated. There really isn't anything like this. It's not replicable, not easily, right? Like, there's a lot that went into this, and it's not just it's not something that like you could be in like a YC cohort and do this in a couple weeks or something as part of like a pivot.
Yeah.
Yeah.
Well, I mean, just the API stuff alone makes my brain spin. But you worked with like one of the hardest ones in the early days, the interactive brokers.
Yeah, so hard.
Those guys.
It's impossible.
I know a lot of,
it's actually impossible.
Yeah.
Like, I would actually go so far to say, like, no, most people just give up. Yeah.
I'm always curious with that company. I say, man, if they just splashed a pretty front end user interface, made it just a little easier to work with, it's like a 10x on that business, because they're so
it's the most underestimated, misunderstood business, especially by the way, you're asking about VCs. A lot of the VCs originally have never heard of interactive brokers, and so that we should be more like Robinhood. And I tried to explain at that time, no, interactive brokers is actually a much better business than Robinhood. And they thought I was crazy. Like, okay, he doesn't get business. And now I think anybody knows this space would agree with that statement. Interactive brokers is, I think their market cap right now is 3 times Robinhood. And it trades like a value stock, right? Like, so that underestimates its potential, to your point. If they actually like cared.
I mean, I know so many hedge funds and RIAs that have plugged in there that have had to build literally entire businesses and software just to interact with interactive brokers, because it's so atrocious, but it's the best experience from the trading and rate side. That it's someone will figure it out. There was an interesting article recently about the interactive brokers family and the son and what's going on. We'll post a link in the show notes. Can't remember where it was, but
yes, send that to me. I'm like, it's a minor obsession of mine now in the story of this company, because again, it's so fascinating.
Well, it's just weird to see. Like, you think about it and you're like, man, it's like Vanguard sometimes. Like, but Vanguard also, despite their success, you look at some of their user interfaces. I'm like, this is almost intentional from these guys. Like, it looks like it's 1985. I joke, I can't remember if I was transferring to or from Vanguard a retirement account or something, and it took like 4 months, but it was during like the worst market drawdown. And so I joke, the most alpha I've ever created in my career was luck from just how long it took Vanguard to transfer this stupid account, because it was impossible.
I think it probably stems from, like, it goes all the way back to Jack Bogle. Like, he apparently was like, he dragged his feet on ETFs. Like, he was against ETFs. He's just very conservative. He's like, no, index funds are like all we need. We don't like, he was like against ETFs, and like people had to like, I mean, I think it was part of what, I mean, like he made some bad calls at the end. He was just very conservative about this product innovation.
Yeah. Interesting. Although they've gone like full boat turn in the opposite direction now with a lot of stuff they've been rolling out lately. We'll see. We'll see how it goes for them. They're like this big private equity offering and some of the other things. It's a curious branding, but we use a lot of their funds. We love those guys, but
we do too. In fact, Kyle, who's awesome, was on our team. He was a PM for many years, and this product manager, because they have both, right, at Vanguard. So he's sort of like a post Bogle head, but like still has a lot of that philosophy. And we definitely like Vanguard ETFs. They're still really well constructed and cost effective and all that. Yeah,
well, you could do worse, certainly, that's for sure. What's his old great quote? He says, he was talking about his investing portfolio, and he says, I do indexing US based only. is it like the optimal portfolio? No, but he's like, there's infinite worse, which is guaranteed. There's certainly infinite worse out there.
It's actually not a bad framework.
What's been your most memorable investment? You look back over your career, anything good, bad in between?
The funniest one is I bought into NFTs really actually pretty early through something called Whale. That was really funny.
And what does that mean when you say you bought into NFTs? What'd you buy? You buy some
I bought something
gorillas?
called Whale, which is like was really early on, and it's like a token. It's an asset backed token, but the asset here is NFTs. So it was pretty wild at the time. This was like pretty early on, so that was pretty revolutionary. So it was like the first token that was asset backed by NFTs, and I bought it before the NFT thing kicked off. And then I remember it went up like 600 or 700% in like a week or something when the NFT thing went up. And I sold some of that to then diversify further into crypto, because I was never like big on crypto. It was like a very weird thing. I was doing it more for learning. So it was more of an educational investment. It was like a small enough amount to be like, this is education, right? I just want to learn what's going on with this. And I was like, wow. And then I sold some of that and then diversified it into other networks that have gone on to do well. I still don't feel like I don't understand crypto enough to actually recommend doing anything I just said, but it was definitely memorable. I just remember
I can't wait to be doing this.
I was like, wow.
Yeah. I can't wait to be doing this by hologram in 2025 and you and I are talking about
welcome to the metaverse.
The symphonies for NFTs, and we're buying the dip system on those. Exactly. It'll be fun to see that world evolved. I don't think, it's weird to say, I was trying to think, I don't think I've ever bought an NFT. I tried to the other day, of friends, just to try to do it, and didn't. Anyway, Ben, it's been a blast. People want to find out more. What's the right place? Where do they go to find out what you guys are up to? Sign up for an account and start composing.
Just go up to composer.trade, set up an account, and that's it. It'll walk you right through, and it's easy.
Perfect, listeners. Send me your best edited iteration of the Faber systems. Find them, improve upon them. Send me and let me know. I'll follow them and see how they're doing. We can track them and report back. Ben, thanks so much for joining us today.
Thank you.